Let's start with the impacts of the Middle East then, particularly the energy shock. What does this do? What are you modelling in terms of the potential impacts on growth and inflation in South Africa if this conflict continues?
Yeah, I mean, the starting point is we tabled our budget on the 25th. We didn't pencil the war in. 3 days later, we've got the war. I mean, it's not the first time we're having an incident of this thing. In 2022, we tabled the budget on the 20th and 23rd. When you wake up on the 24th, Russia had attacked Ukraine. So these are some of the shocks you get into the system. The question is, have you built sufficient buffers in order to absorb these shocks? The answer is yes. But as I've indicated, oil prices, if they begin to go up, South Africa is a price taker, and that will have implications, particularly inflationary impact for us. So the war is worrying.
What are the potential implications for the debt profile of South Africa, which has been rising, and then, of course, you and your government have pledged to stabilise debt levels? Can you continue to commit to that in this environment?
I think we will continue to commit to a debt stabilization process. Of course, we'll have to take into account what the nature of the shocks. At the moment, we have not been able to model the shocks, but we'll have, as time goes on, we hope that is going to be 4 weeks, as President Trump has said. If it is 4 weeks, then it's going to be fine. But if it goes beyond 4 weeks, we'll have to pencil down the implication.
So if it does continue, Minister, what assurance can you offer investors that the short-term fiscal pressures that might result from the conflict won't crowd out structural reforms?
No, structural reforms, for now, we have been doing them now for 6 years. We started the structural reforms in what is called Uvulindlela program in 2020. We've been going through this course. I don't think there's any possibility of a reversal of the structural reforms. The journey continues. I can tell you now, even if tomorrow there will be a change of a Minister of Finance, anybody, this thing has gained momentum. I don't think it's likely to reverse. And
you're here in London to pitch the investment case for South Africa. Have you found that investors have been less receptive to that message because of the war?
Look, I've met some few yesterday. I think the ones that I met yesterday, they were still maintaining a positive outlook for South Africa. And I hope that's the stance we're likely to see over the next 2 days.
Minister, we've seen global rates rising as markets everywhere seem to factor in higher inflation, and bond yields have been going higher. What impact would higher borrowing costs, if that's what endures for South Africa, what kind of impact would you be thinking about for the South African economy?
We're coming from a high borrowing cost environment. If you look at what we were in May last year when we presented the budget, and now, it's huge change. So we think that we've built sufficient buffers, as I've indicated, to sustain that. But there's another positive side to this development, in the sense that while we will have those problems, there's analysts are telling us that we are likely to see an uptick in terms of commodity demand and prices. And we're a commodity producer, we suspect that we'll also benefit from that.
Yes. Will you see a change? Will you be rethinking your plans around debt issuance, for example, what's dollar denominated, what's for local debt markets, as a result of big moves in the dollar?
We've got a standard kind of ratio. Our ratio is 85% rand denominated and 15% other currencies. Precisely because we're worried about these price fluctuations. So I think we're still going to continue with that ratio.
How are relations with the US right now? Are you continuing talks with the US on trade? Has that moved forward at all? Have there been any significant developments on that front?
We'll continue talking to the USA government. I mean, USA is a major economy to us. It's one of the biggest trading partners. So we think it's in the interest of both countries that the trade relationship must continue.
Has there been improvement? Has there been a step forward in terms of trade negotiations?
There has been a step forward.
Yeah.
I mean, Initially, at the beginning of last year, we didn't see any counter proposal from them. But towards the end of the year, we started seeing an interesting change when they put counter proposals on the table, some of them being attractive. So I think, except that I can't negotiate with them over the media, but I think there's an improvement.
Does the Supreme Court ruling strengthen South Africa's hand?
Not to our knowledge. We're already at 30%. I don't see, in the light of President Trump's reaction with this 150-day, whatever it is, I don't see how it's going to strengthen us. It places us where we were.
Can I ask you about the labour market in South Africa? Unemployment by global standards pretty high still. Yeah. Are you taking measures? Are you wanting to take measures to bring more manufacturing to South Africa? For example, in the auto sector, there's been talk of trying to bring more manufacturing jobs, using maybe tariffs to do that.
Yeah, the automobile industry is tricky in the sense that the OEMs are not in South Africa. They've got their divisions in South Africa. And largely they've been exploiting the AGOA advantage South Africa has. And so far, we're still in the AGOA in terms of the legislative arm of the USA. We don't know what the administrative arm is likely to say. In that sense, if we continue being beneficiaries of AGOA, we see the automobile industry remaining. Although there's quite an interest from the emerging markets, China, India, and so on, to set up plants in South Africa in the automobile sector.
So do you see that unemployment rate coming down?
We see the unemployment rate coming down. Last figures, it dropped by 1 percentage point. We see, if you look at our structure of the budget, we're changing the composition of expenditure towards infrastructure spending. Over the medium term, that's growing by 9.7%. The effect of that is likely to have on labor-absorbing industry such as construction. We think that will have an effect moving forward.